Hiya traders. You know, people spend years trying to work out what's going on with trading and trying to make it profitable for themselves. And when people start trading, they're probably as close in the majority of cases to being successful when they've just started as they're going to get. And that is sad. And it motivates me because I want people to be successful. And, you know, there's no fun in the misery of losing. So I'm going to talk to you today about just some simple ways of using the chart to understand trading, understand price charts, and hopefully set you on the path to success. And so let's have a look at the charts now. So here's a basic candlestick chart, guys. Basic candlestick chart. And I'm going to go into detail in a second to look at some trading opportunities that appeared within these candlesticks. But undoubtedly, you know, if you've looked at thousands of charts like these, you'll have some familiarity with them. But to start off with, a blank canvas like that, you know, is probably not going to help you. You may spot a double top in here, a double bottom down here, and maybe even a double high double top in here. You may spot those or you may not, but really you're limited. This is a 5-minute chart, but it could be any chart, couldn't it? You just can't tell by looking at the candlesticks themselves. And so I've devised a method for reading the candlesticks and trading the charts when opportunities arise. You know, some of these candlesticks on the close of the previous candlestick, there would have been no opportunity for a good reward to risk trade. And in other cases, there would. You know, for example, this candlestick here, big green one, that red one there, those two red ones there, that red one there, this green one. You know, there are opportunities in there on every chart, and it's by taking parts of the candlestick as profit and only taking a small risk, like this red one here, tiny little tip, tiny little tail on the top, and then it goes red. But how do you know that's going to happen? I mean, this one has a small doji candlestick before it, so possibly a clue in there. But most of them, you know, don't. What about this red one here? Has a green candlestick before it, and it's red following it. But you need a method and you need some context for, you know, for this. So what I developed was a system using exponential moving averages, and I use the 8 and the 20 exponential moving averages. Okay, so then all of a sudden, like I say, you've got context. You know that price is below or above these averages, and it's a band. I call it a river. You know, the price doesn't like spending time in the river, and it bounces and it goes through, and it bounces and it goes through. And this is what it does. And there's a method that I have and I share with my traders. There's a method for understanding when it's likely to bounce and when it's likely to go through. And when it bounces, obviously, you know, there's a trade. This one's the 20 EMA bounce up there, and it bounced again there and bounced again there. 20 EMA bounce down here. And so this river, you know, it's not that 100% of the time it'll bounce from it. Sometimes it goes through like this, but there's a method for understanding when that's likely to happen. and then it's what happens next as to whether you can take a trade from it or not. And this river is value in trading, and so price doesn't go very far from value, but when you're in a good place in relation to value, there are trades here, and trades long here and here, and they were bounces. So sometimes it bounces from the 8, sometimes it bounces from the 20, and these levels act as support and resistance. So traders should anticipate that these levels of support and resistance will hold until they're broken. Okay, so what I mean by that is that, like in this case here, maybe people assume that this 8 EMA is going to hold because the signals are right, and then go short, but then it's going through here and there are signals for that, and then the trade is, okay, since it's going to stay above the 8 EMA, I'm taking a trade long. Down here, breaks through, signal for that there, and at this stage it then comes back, hits the ceiling, let's call it that, hits the top riverbed and bounces down. And so in each case, the traverse through the river is confirmed when price revisits the river. Like here, it went through, came back and stayed above it and bounced upwards. It came through to the lower side, came up, hit a ceiling, and then came down. Came up and then just bounced down. And there are trades for each of these particular aspects. And this is a simple support and resistance trade. That's all it is. That was the Dow. This is the Nasdaq, and you can see the same thing happening here. Breaks through the 8 EMA there, tiny wick on the bottom of that, and then bounces up, comes back down, confirms the floor, the support there, and then bounces up. Same here, comes down, bounces up, comes down, bounces up. And this applies to every trading chart. That's Nvidia, a stock, a US stock, and you can see the same thing happening here. Price came down and then bounced up. Let me just get rid of that. Okay, came down, went up, bounced down, went up, bounced down, and again went up, this time to the 20 EMA, bounced down. Trades for each one of these. So if you want some help with your trading, I can show you this system, and it's gold. It's trading gold. It's Ant's gold trading system, and I think that you'll love it. I certainly do. Anyway, short one for today, but that's an introduction to chart reading and trading as a whole. I hope you enjoyed it. My name's Anthony Beardsall. Catch you on the next video. Do subscribe if you want more of these videos, and leave any comments or questions in the boxes below. Okay, cheers for now. Bye.